Oh gosh, these lights are bright.
Yeah.
The interrogation begins, although I hope this is much more a conversation between the three of us. And thank you all. It is so great to be back doing this in person after what feels like a very long 2-year break, and appreciate very much the General's comments. He and I had a chance to speak a little bit beforehand, and I come from an Army family, have a brother who's currently active duty with the 82nd Airborne. We grew up mostly in Europe, Netherlands, Belgium, Germany, so it is kind of surreal. And I know this was a discussion I had with some of my European colleagues just last month, or a couple months ago, when we were together for the first time in Switzerland, that to be in a world where not only are we still in the midst of a global pandemic, but that we have a land war in Europe once again defies sort of the imagination, and our hearts continue to go out to the Ukrainian people who are fighting for their homeland and everything they hold so dear. And it really, I think, brings us around to this conversation with this group, because you all work in an industry that very much tries to assess the global landscape, assign some risk analysis to it, and then adapt your business models to that evolving and changing world. And again, where we are now compared to where we were 3 years ago before this pandemic and everything else that has happened, I'm guessing has changed a lot of working assumptions for you all in terms of how the insurance sector is going to operate in this new world we find ourselves in. So let me maybe kick it off with just kind of a warm-up question for both of you. Given that we've kind of gone through this period of major change, what trends or changes do you think will have the most long-lasting impact on the insurance industry and your companies? And looking ahead, what are your projections for what's in store for the industry in 2023 and beyond? And Eric, I'll start with you, if I may.
Okay, well, thanks for having me. Welcome, everyone. I realize, as Dean was speaking, I've been in the insurance industry over 30 years. And I too, I mean, we could go on all day about how you feel about the business that you're in, but it is the highest of highs when you see what we're able to do for people around the world, frankly. We're basically US, but around the world. And then you got to be careful because we're entrusted with the balance sheets of our companies. And consumers expect us to be there, no kidding around. And yet, as Dean said, we've seen some disasters over the decades and decades. And so when I think about where we are today and where we might be heading, obviously, inflation alone is going to affect all of our consumers. So we have to think about our value proposition. And I'm sure we'll talk about this later as well, but as inflation rises, what's the tendency of the consumer? I can't afford something that I really should have, like life insurance, longevity insurance, etc. So, we're thinking about that. It's sort of been an abrupt change, right? It was only a couple of years ago when the 10-year Treasury was at 0.34. And just the other day, it was at 3.2. I mean, it's hard to fathom. Mm-hmm. So our thinking has changed completely from interest rates going like this and then hitting an all-time historic low to now going like this in a relatively short period of time. How does that affect us? The hybrid work environment and how we deal with everybody that we have to deal with, from advisors to regulators to consumers to our third-party vendors, by the way, where we might have interacted with them in person every day, every week, every month, whatever it was. Now you've got a period where you haven't seen them in person for a long time. You're putting new people, new employees, onto the books of both our companies and their companies. And we have to figure out how to operate at the same level we operated 2 years ago and better, right? When we think of 2023, neither of us want to be saying things like, well, you got to remember it's the pandemic. Consumers don't care about that. They care about making sure that we're there for them, no matter what's going on environmentally. So this is a reminder for all of us, especially for those of us who have more than 30 years. I was the treasurer of MetLife in the Great Recession. And wow, was that interesting. And you sort of think back, and I remember saying, we probably won't have to go through something like that again. And then look what happened in the last 2 years, right? And oh, by the way, just to add insult to injury, as the general just spoke about, we have geopolitical risk that maybe all of us didn't really think we had. You didn't think about it on a daily basis. And now it's here, right in front of us. What could happen next, and how does that affect the global economy, and in our case, the domestic economy? So I'll turn it over to Shannon, but we could talk all day, I think, Mike, on just that question.
Yeah, no, and we'll follow up on some of those topics. But Shannon, your thoughts?
Yeah, I think very much to what Eric has said. I think to me there are two issues from a P&C perspective. Number one is the rise of the systemic risk. I mean, we live in this connected world and increasingly connected with each other. Globalization is real. And when we look at P&C insurance protections, the correlation between historically isolated lines of businesses and risks are much, much higher. And it's getting more difficult for us to price that risk. So as reinsurers and insurance companies, we're pretty good at, estimating the living with uncertainties, estimating and put a price on that unknown world. But that world has gone much bigger. And I think just take the pandemic as an example. It's not just the accident and the health lines. It's not just the travel insurance. It's property business interruptions. It's contingency, event cancellations. And who would have thought, immediate aftermath of everyone going back to working from home, economies stand still, there's a lack of transportation. So we saw a spike in agriculture, dairy farmer claims, because they couldn't get their dairy products out to their consumers, to the supermarkets. We also saw with the economic downturn, we saw there's an impact on surety, financial lines, trade credit, mortgage. We're living in this connected world a pandemic that impacted many lines of the P&C world. I mean, the war in Ukraine is another good example. It's not the war, the terrorism that you would lines of businesses that saw an increase in claims. There are also trade credit, political risk, surety. A lot of the companies are impacted. There's a big debate going on in the industry around aviation war liabilities. Where does that sit? A lot of ships from marine perspective that are trapped in these ports. So I think that really the systemic risk that in this world that we're living is a really huge issue that we need to dedicate more time to.
Thank you both for the comments, and we're going to dig into a few of those in a little bit more deeper detail, although your observation, Shannon, in terms of some of the insurance losses and risks coming out of the war in Ukraine is one, and hope we'll have some time to follow up on, because certainly I've been reading about all of these leased aircraft that have now been appropriated in Russia, and it brings up a very interesting insurance question, so we'll hopefully get a chance to talk a little bit about that. But I want to talk about another area of insurance, cyber insurance and cyber risk. Which again seems to have evolved very rapidly over the last few years. I remember, pre-pandemic sitting down with a number of carriers, and the product itself was fairly prevalent. A lot of companies were getting into the business fairly aggressively. The pricing was competitive. That seems to have changed significantly, and certainly a combination of factors, I'm guessing, has come into play between the impact of the pandemic itself and certain cyber security risks associated from working more remotely, as Eric touched on, is one of the issues. But I think the increase of the severity and scope of cybersecurity attacks, which, circling back to the situation in Ukraine, was something a lot of us were very concerned about, that we would be seeing an increase in cybersecurity attacks as a result of that conflict. I know this is an area of specialization for you, so I would welcome your thoughts on sort of what's driving that marketplace, and where do you see it going from here?
Yeah, so cyber is a really interesting market. I remember 5 years ago, there were numbers being thrown around 10 billion. Is this going to be a 10 billion industry, 20 billion industry? In a short few years, we're talking about this industry being a 30 billion plus in 5 years' time. We're at 6 billion today. It is a huge market that's growing exponentially. So from AIG Re, we have a quite sizable cyber reinsurance book. So get pretty good visibility across the different segments of the market through our cedants. Ransomware, very much related to the situation in Ukraine right now, that came out of nothing to, over the last 2-3 years, that to 75% of the claims in 2021 was ransomware. And even before the war started, we could trace quite a sizable percentage of those ransomware attacks to Russian hackers. So over the last couple of weeks, we have seen a reduced amount of activity in ransomware attacks as a result of the war. But as we just heard from the general of the situation in Ukraine is evolving, and as we having more of these conferences and these dialogues happening, our customers and ourselves, there is a heightened awareness around what's going on here and the potential for cyber attacks, and so people are reacting to it. And now it has become a race to how quickly can you patch it? How quickly can you strengthen your cybersecurity? Our customers are looking for advice from us, as well as protection. So there's now increasingly, over the last year, we have seen a constant dialogue between reinsurers, insurance companies, and customers in terms of how do we strengthen our security, how good is our cybersecurity and cyber hygiene. In some cases, you need to have an excellent cybersecurity system or management to even secure cyber insurance protection.
Eric, let me maybe follow up with you, just based on Shannon's comments. As CEO of a company, I know you get briefed on a number of issues. You got to sit down with your board, talking about both obviously your business profile, but also sort of internally the areas that you're focused on. How big of a deal is it for you now in your role when it comes to cyber security and cyber resilience, given all of the developments over the last few years, and some of them very specific to the financial services sector as a target? To Shannon's point, we've seen some very well publicized ransomware incidents involving insurance companies that have literally shut down operations, impacted policyholders. So I'm guessing it's risen in prominence. Maybe it's always been a significant issue, but maybe sort of that inside the boardroom perspective from you would be great.
Sure, Mike. I would say generally, as I think about it with respect to my own board and some of my buddies in their boards, it's number one.
Okay.
You enter the boardroom and it's like, Eric, how you doing? How are the kids? Cybersecurity. They just say the word, right? And you have to start talking about cybersecurity. I haven't even taken a drink of water yet, right? And that's probably appropriate. We've stepped up across the board. If you think about what Shannon said, yeah, we're calling. What should we be worried about? Oh, by the way, are we reading this contract correctly? Just making sure you got this covered. Third-party risk. Again, it's not just what's on our systems. It's what resides on the third-party systems that we contract. We've been doing deep dives into certainly our top 10. I mean, I would say we have 5 really big vendors. And we're spending a lot of time on that. FBI briefings. I mean, 10 years ago, I didn't go to an FBI briefing on cyber terrorism. Now, we're in contact with them a lot. And I'm sure, again, you know, all of my peer companies are doing the same exact things. So I would say from an operational perspective, just the day-to-day, it's heightened. It was always important. But let's just be fair. It certainly has moved higher now. And from a board perspective, I would say it's top 1, 2, 3 risk. And we're talking about it every single board meeting.
Shannon, I'm sure that's music to your ears to hear that type of focus.
We'll make sure we insure the Brighthouse.
As long as you got us covered.
Yeah.
But I'm interested for AIG Re. I mean, are you part of the internal discussions on sort of your own cyber resiliency plans for your organization?
Yeah, internally, I think are very similar sentiments. As it's certainly a top 3 priority for the board and our management teams. We get daily cyber intelligence reports. We have a specialized IT team that monitors that, follows up, analyzes the data. What we also have is our internal cyber framework is being reviewed annually by our management team and the board. You know, we see an increasing demand and pressure from the regulators around, you know, holding our management team and our boards accountable. Bermuda, the BMA has requested all the insurance companies in Bermuda to have the board to review and approve the annual cybersecurity report. You know, those are the movements that's encouraging and that's positive that we need to see more of.
Eric, I want to go back to you on one of the comments you made, and I know this has got to be a big deal for you all at Brighthouse in terms of just this swing that we have seen in interest rates and with the inflationary pressure. I mean, you're absolutely right. I remember, you know, as a regulatory community globally, you know, we've been talking about persistent low rate environments for years, it feels like, and it almost became sort of a conventional wisdom. That's how it's going to be, you know, forever. But it has changed, as you noted, and changed fairly rapidly. And on top of that, you have all of these inflationary pressures, which are obviously impacting consumers' choices. How do those play out in terms of your business strategy, particularly given, you know, all of the experience we've had for the last decade with a low interest rate, low inflation environment?
Someone on my management team likes to quote himself, and it's kind of cool. I thought maybe I'll do that myself occasionally, right? And I remember going way back when Lehman Brothers went down and when we had to go through all of that in the 08-09 time period, it really focused you into understanding we are charged with running these companies no matter what happens. We don't get excuses. You don't get to say, well, look, I mean, I didn't consider that. You got to give me a break. Well, I don't think I'm going to get a break, right? That's not what I get paid to do. The management teams of these companies are supposed to figure out how to be prepared for whatever's coming. And if you think about what happened 08-09, and you constantly think about it, which I think I have, I don't know, every day or at least week since then we were thinking about what happens if rates continue to go like this? What happens if you get a shock and it's real? It's not just in a model, right? Because that's another problem. Well, we have the models, right? Well, that's not going to help you when it actually happens. What are you actually going to do if rates continued like that? What would you do if rates went to an all-time low, the stock market got hammered because of a global pandemic, right? You got to be ready for that. And so when now we think about, okay, the reverse is happening to some degree, and who knows how the coupling of rates and equity markets are going to go here. But certainly rates are a lot higher. Equity markets are now getting hit. Consumers are worried about inflation, but we have to help them make sure that they're not so worried that they don't buy the protection they need. Just like companies. We have to have protection for certain events, And we've got to make sure we're doing that in every single environment. So I don't feel like off balance, and I don't see our management team off balance. I think over the years, thinking about what could happen, running all the scenarios that we have to run, and then coming up with execution plans, you know, it's worked out reasonably well. I think the people in this room have helped, by the way. No kidding around, okay? The people in this room have helped prepare companies. We're going through a lot of turmoil right now, and yet, look how well the insurance industry is doing. Back to you.
Thank you. And I think you got a little bit of that from Director Cameron's opening comments. I think globally the performance of the sector has been admirable, and we'll take total credit for all of that. Shannon, before we move into the innovation, and we do have audience participation here, so I want to make sure we are engaging with the audience. We have one of the questions that I'd like to pass on to you, and the print is teeny tiny, so I'm glad I have my glasses on here. But what do you see concentration risk playing in cyber resilience? Does that create the possibility of an existential risk to the industry? So what role do you see the concentration of risk playing?
Oh, I think it's a huge concern, especially as reinsurers. We exist to provide that protection to insurance companies for that eventuality. And you know, the tail risk, what we call a tail risk, is 1 in 1,000 year, 1 in 100 year. Up to a point, that remote risk is highly concentrated. Think about how many software and cloud providers, software developers out there. There's only a number of them in the world that are at a global scale. So that risk gets concentrated pretty quickly, and that's the concern. You know, the market is growing exponentially thanks to the awareness of companies that realizing that they need protection on cyber. But as an industry, we're still educating ourselves. We're still learning day to day what are the different types of attacks that could happen. The industry itself hasn't really been tested. There hasn't really been a cyber catastrophe event that's tested the models yet. You know, the models are not as mature as the property catastrophe that's been developed over the last 20, 30 years. So, you know, what we can do is continue to invest in that area, continue with the modeling, with the data, with the research in that space.
Mike, can I jump in 1 second?
Absolutely, please.
You know, cybersecurity war, holy cow, but there have been a lot of skirmishes, right? Just to coin a phrase, and we've been learning from those as well. Okay, this is almost nothing, but not completely nothing. What if it escalated to this, or this? So anything that happens, we're using as an opportunity to role play. If any of the prongs off of that got a lot worse, what would that mean? And in some ways, that's been helpful.
Yeah, I think those types of tabletop exercises are ones that are taking place in a lot of organizations, regulatory community included, and certainly an area, at least from a personal opinion, where we probably need to focus our efforts even more so, just given the potential losses and risks involved. So more to come on that. But Shen, let's switch a little bit into sort of the innovation side and talk about data and how data is being used by the sector. And Eric, I'll come back to you on this from the Brighthouse side as well. But you know, reinsurers have actually been a fairly early adopter of harnessing the power of data for purposes of their businesses, be it risk modeling or even just product design, structure, and pricing. If you could talk a little bit about how AIG Re is relying and using that data, both from a historic perspective and forward-looking perspective, and what impact that has on your customers and on your products.
Yeah, sure. You know, as a reinsurer, I think reinsurance companies has the luxury of getting large quantities of data. As a treaty book writer, underwriter, we get data from our cedents. Is how do you use that data? Do you have the expertise to analyze those data? At AIG Re, we have a separate entity called Vardis Research. Now, that Vardis Research, we have 60 employees in that company, including 12 PhDs in atmospheric science, hydrology, seismology, engineering, and the rest of the team include mathematicians, data scientists, modelers, software developers. So, these group of people that enable us to actually digest large quantities of data and apply that data to create our own view of risk in a particular line of business. Now, that has helped us hugely to create that competitive advantage and to identify areas where we can offer a differentiated pricing, bring down that price for segments of the market that perhaps doesn't need that, perhaps are good citizens. So I think, but obviously we as underwriters can't just leave the brilliant minds on their own. So what we have done is we need to also create a dialogue between our research team and to what our customers and our investors need, and let them hear the problems that we facing day to day. So we've created this innovation team, which I chair. It's a small team that brings experts from the underwriting, from modeling, from technology, and from research. And from our ILS, which have day-to-day conversations with our investor community. So, we're trying to create an incubator where ideas can flow through to what we are hearing from our customers and our investors to the research team.
So, Eric, maybe take me back inside sort of your office when you're sitting down with your team talking about using technology and data. And certainly for you all, the big macro demographic trends that are happening out there in terms of, low birth rates, people are getting married later, they're not buying houses, or they can't even afford to buy houses as much anymore. That's impacting a lot of their decisions when it comes to products. Similarly, you probably have a lot of data just on your customers generally. And I know there has been a lot of discussions happening within companies about how to use that data to better connect to the customers, to better tailor products. And I'm sure you're getting any number of, sort of insurtechs that are out there offering products and services, and you got your own teams probably pushing you in a lot of different directions in terms of where to invest, what to invest in. But talk a little bit about kind of where you all have decided to focus your efforts and resources when it comes to technology, particularly from a customer-centric perspective.
Okay, yeah, we'll focus maybe a little more on the tech piece versus data, as valuable as data can be, which you heard Shannon talk about. So from our point of view, our core business is through financial advisors. We believe in the value of advice. I personally believe in the value of advice, having been in this business for a long, long time. And so I'll give you 3 examples. One, we are committed to develop and innovate when we can with respect to digital tools for advisors so that they can understand their business better and better. They can understand the products deeper and deeper, and then their value proposition to their clients, who become eventually our customers, is as deep as we can possibly get it. And I would say over the last, we've been a standalone company for almost 5 years. That has been a major area where we have put a lot of resources and dollars into. So that's number one. Number two, you mentioned insurtechs. There's a company called Policy Genius that we have a fantastic relationship with. And, that built up, our relationship with Policy Genius was very much like this, right? It wasn't, hey, we've developed everything over here, all you got to do is plug a wire into us. It's, if we wanted to do this with you, how would you suggest we get together? What do you need from us? What can you use that we've already developed? What have we maybe missed, or how can you make our offerings, more exciting, more marketable, more valuable to consumers? So that's been a big one for us. And we are inundated, so you got to be choosy, right? But that's a partnership that I'm pretty proud of. And then in a whole different vein, BlackRock. We have a huge relationship with BlackRock, and we've developed a product with them called LifePath Paycheck, which will be coming to market probably next year. And, this is an opportunity for us to get guarantees into 401ks. And by the way, from our point of view, it's also a distribution play, right? Because then we will have access to everyone at a company who's part of the 401k plan. All levels of income, et cetera. So that's kind of a multifaceted play there. But in each of these cases, what we're doing is fueled by technology. And it wouldn't be anywhere near as valuable without the innovative developments that we've put into each of the three areas that I mentioned.
Excellent. Shannon, anything you want to add in terms of future innovation from a reinsurance perspective, or where your company is kind of investing its resources from either technology or partnership perspective? Do you have those same potential relationships with some of the innovators outside?
Yeah, I think it's just such a big topic. It's my favorite topic, by the way, so I love talking about innovation all day long. Yeah, I think there are definitely partnerships where it makes sense for us to use. But as I mentioned, we also have a strong 60-person team of experts. I think we have to recognize that not all data is good data. As an industry, I think there's a big issue around the data is still not standardized. The format, it comes to us through our insurers in various different forms. So a lot of that is not usable data. The data quality matters, the standardization matters to us. When we talk about big data in this world, the true big data where the quantity matters more than the quality I haven't really seen that. I don't think that's being used as much as you would expect in the industry yet. And our data strategy is more around how do we use it to make better decisions, to create new products, close that protection gap. So I think that's where the innovation comes from on the product side. And the other side that we're investing a lot of time in is how do we bring that capital more efficiently into supporting some of these risks. Cyber as an example, it's a market that's expected to grow 5-fold in 5 years. Insurance companies are not going to increase their balance sheet by 5-fold in 5 years. That's impossible. So we're looking at innovative ways, and I think the industry as a whole needs to work together to look at innovative ways to bring that efficient capital into supporting some of these risks, to disperse that risk, and that's truly what we're here for.
Your observations in terms of what might happen in the cyber market leads me to my next question for both of you. The NAIC recently formed a new letter committee, which for us is a big deal. We don't usually, that is a big signal that it's an area of its significance for our community, and this new committee is going to be focused on issues like data, AI, innovation, cybersecurity, exclusively those issues. And again, being part of a global regulatory community, I know talking to my colleagues, that's an area of focus and emphasis for them as well, domestically and at the IAS as well. So I guess a good question for you, and not to worry that there's a bunch of regulators sitting in the audience, including the chair of our new H committee. But I think it's really an opportunity, which is, are there based on sort of what you're seeing, potential regulatory blind spots that we might want to turn our attention to? Because I know from a company perspective, you don't necessarily want regulators to have blind spots, because when they eventually do come to focus because of some existential crisis, then there is a whipsaw effect. And so appreciate any sort of candid views you might have on what may be some of those existing or developing regulatory blind spots that we should start to look at a little bit more closely.
Did you look at me last?
I'm just going
I
back
can
and
go
forth.
first.
So
He looked at me last. I'm stuck. I would not call them blind spots.
Okay.
You all are too smart for that. But I would maybe.
Well played.
Maybe.
You didn't get your job for.
But maybe I could give a regulatory reminder. And maybe I'll go all the way back to, again, I was touched by Dean's speech. This industry is a fantastic industry, and it's an honor to be part of it. And we have a responsibility too. And it's nice to see Dean, and I know you feel this way as well, talk about helping us develop products for end users, for consumers. And never forget, got to make sure manufacturers are strong in every way they need to be strong. Balance sheet, cybersecurity, data management, data privacy, all that stuff. Uniformity, when it's appropriate, can be helpful, because we're trying to manage all these plates in the air. Okay, we've got to report on this, and regulators are worried about this, but then they're worried about this over here, and it's a different framework, and then they're worried about this over here, and it's a different framework as well. But there are critical components many times that can be socialized, and I think that's why, well, frankly, that's one of the reasons you're all here today, right? To talk to colleagues from around the world. That, I will remind you, that can be extremely helpful. And when you have to deviate, then you deviate, right? That's your job. But wherever there's a uniformity factor that you can help with, it places a little less of a burden to report things that are similar on 3, 4, 5, 6 different bases, if that makes sense.
Yeah, very good observation. Shannon, any regulatory reminders?
I agree with Eric. I think blind spot is not a word that I would use. I think it's a fluid dialogue that we have to, as a whole in the industry, all sides need to work collaboratively and have that constant dialogue to identify areas where we can do better, the regulators can hold us accountable, and that makes sense. I think a lot of the airtime has dedicated to the protection of customer data and how we use that in underwriting claims. And on the other side, and the cybersecurity of the insurance companies, we're constantly being a target for cyber attacks for that reason. But I think to Eric's sentiment is we need to have more private-public partnerships to address some of these systemic risks that we've talked about. I think that's where I truly want to see more collaboration in terms of innovation with the regulators and with all sides from the industry.
Thank you both. Let me pull back in the audience here. We're getting some good questions, and I want to get to at least a couple of those before we get to our next round of questions. So Shannon, let me start with you on this first one, which is data is critical, but increasingly data protection is real, with countries requiring data localization. How do you overcome this as global organizations? And I think that's probably specific to those data localization requirements.
Yeah, so I think we, GDPR from the Europe came about a couple of years ago. We have a Swiss subsidiary that we adhere to all of the different regulators in the jurisdictions that we operate in. I think we have to, in this world, not, as I said, not all data is good data. We have to become smarter at telling our insurance companies, our customers, the data that we actually need. We don't need all of your data. Don't give us your pet's name, for example. We need to recognize that the type of data that we need is going to help us to help customers close that protection gap, to help them come up with the right pricing for that right risk. I think that's where the balancing act comes from, is you have to balance the benefit of using data analytics to create a better insurance product to the side where the cybersecurity side of it is the security of holding the data and holding the necessary data, not all data.
Eric, let me go to you for this next one, and it links to, again, I think both comments we heard from Director Cameron and sort of you reflecting on them, which is the performance of the sector, performance of the regulatory environment over the course of the pandemic. And again, being there for customers in very challenging circumstances, not just with the pandemic, but a lot of everything else that's happened the last 2 years. So, and the question is, since we're, in some respects, we've emerged as champions, and I guess the question is, have we, in the eyes of your customers and employees, and has sort of the perception of insurance companies improved over the last 2 years in any way?
I'm part of a group called the Alliance for Lifetime Income, and it has shown, that's all about guaranteed income. It's pretty narrowly focused. It has shown, the research has shown over the last couple of years, that the perception of life insurance and annuity companies, at least, has gotten better. There's a number of reasons why, but I think the performance of the industry to some degree, I think more and more people talking about the notion of longevity insurance, for instance, just it gaining more and more and more traction, the Secure Act passing, things like that. It strikes me that, yeah, the perception of the industry is a little bit better. I don't know how far, and I don't think right here we could create a scale and just try to judge it, but I can feel it and I can see it in some of the data. With respect to employees, I think the insurance industry has done a really good job, both by being prepared for this, because of course employees wonder, well, look what's going on here. We have a global pandemic and we have equity and interest rate market shocks. Please tell me you were prepared for this, because I'd like to keep my job. And as I look across the industry, I'm really proud. I see Pete Schaefer sitting over here, and we can't actually see anybody because these lights are frighteningly. But I bet he has a smile on his face right now because he's pretty proud as well.
Pete's always smiling.
And doesn't that feel good, Pete, that we came through this with some sense of flying colors? So from our employee base and some of my colleagues that I talk to about their employee base, I think they feel pretty good. I've already touched on customers, and I think the regulators feel pretty good about how we came through this, how we were prepared both financially, how we were prepared technologically, and maybe also how we were prepared to manage our companies whose customers were relying on us no matter where we were, in our houses, in our basements, etc. I do feel that it was a proud couple of years here, certainly for the life and annuity world, and I'll add the P&C world as well.
Yeah, I think that's true.
So let me, we're about down to, we're in the final stretch here, and I'd like to touch on sort of a couple workforce culture issues, which have become bigger deals, again, particularly post-pandemic, starting kind of in the area of diversity, equity, and inclusion, which has been a topic of discussion for a number of years, but certainly has had a lot more emphasis in just the last year or two. And at the NAIC, we have a executive level task force that is focused on this. We recently just announced under Director Cameron's leadership the formation of a foundation which is going to provide scholarships to students who are interested in pursuing potentially careers in insurance that come from disadvantaged background, because I think one of the things we've all observed, and we've heard from talking to the industry as a whole, is we need to do a better job of attracting more diversity into our workforces from an insurance perspective. It's good business, and we need that diversity in terms of really understanding the markets we serve and the issues that they face. So I'd be, and Shannon, I'll start with you, because I know Bermuda generally is focused very heavily in this area, have their own sort of programs that encourage participation in the insurance sector, which I'm guessing is critical for a marketplace like yours to have talented people coming into the industry. Sort of what are you doing, and where do you think the areas of opportunity are for the sector, particularly coming out of the pandemic? I think one of the questions is, do we have a good value proposition for anyone who's looking at potential opportunities in terms of, as Eric just mentioned, the work we do and helping people and helping the economy and helping businesses. Talk a little bit about sort of what you all are doing and how you're approaching this issue.
Yeah, I think not surprisingly, diversity and inclusion is very high on our agenda in the boardroom with the executive management teams. We have, within AIG, we have scholarships, mentorships at all levels. We encourage employee resource groups to form based on race, ethnicity, gender, and we also have groups for disadvantaged groups. And I think importantly that and also I think you mentioned Bermuda, I think that's right. Bermuda is a small island. There's only 60,000 people, but it's a majority Black community. So, and we're a member of a BEER, and many of their BEER members have these scholarships and similar sponsorships and scholarships and foundations that we encourage with these outreach programs to reach those disadvantaged groups or historically underrepresented groups. But I think it's important for us to also recognize that it's not just to reach and recruit the different diverse employee base, but it's how do we create that community to keep them? I think that's what we're also spending a lot of time on, is that people want to feel belong somewhere, right? All of us do. So what we have created is different programs at different levels, stages of a person's career. We have early career program with mentors. We have all the way to executive level coaching, which I'm a part of a participant of, and that we introduce sponsorships and create that network. I think all of that is really helpful, and I think it's also encouraging to see that similar changes are happening at brokers, at our clients, across the industry. I think it's important to create that ecosystem where people generally feel comfortable at working in this industry. I think it's great that NAIC has created this foundation.
So Eric, let me do a mashup question to you here, which combines both the DE&I as well as kind of the post-pandemic workplace policies in terms of being in the office. Pretty much every conversation I've had with fellow executives in the last 6 months, when I ask them, what's the thing that's keeping you up at night, in addition to the cybersecurity stuff, it's keeping, attracting, and retaining my workforce. Far and away an issue that, frankly, at the NAIC we're very focused on. And I think as they're looking at solving for that, certainly culture comes into play, and having a good diversity program is certainly one of those. But also the policies about how you're going to work, where you're going to work from. Talk about those, sort of how you're approaching those decisions and conversations at Brighthouse.
Sure, and maybe I'll pick up on something that Shannon said. From a DE&I perspective, we're doing all the things that Shannon said, and I won't list them through. She did a great job doing it. Maybe I'll focus on one thing, though: inclusion. None of this works without an inclusive environment. You heard Shannon's final comment was, so people feel comfortable that they're a welcome participant in the employee base of this company, period. Everybody. And we've spent an enormous amount of time on this concept, because what's the point of bringing somebody into your company if after 6 months they just leave. And how horrible if the reason for them leaving is they don't feel comfortable here. I think it's our responsibility to make sure they feel comfortable. And that's a big one for me. You know, I do town halls like we all do. I become a podcaster. Very exciting, trying to get in the Hall of Fame someday. But I talk about DE&I on every single podcast. It's not a special topic. It's part of the fabric of how we run the place. Now, to your other part of your mashup question, listen to your kids. My son is 24 years old and works at a cyber company. He thinks very different thoughts from me. And I'm quizzing him all the time about, okay, they're generally remote. When you go to the locations that they're in, what do you do there? How valuable is it? What's not valuable? Because maybe to bring it all the way up to the 100,000 feet, one of the things that all of us are really worried about is, what do you don't know that you don't know? Right? The famous Donald Rumsfeld line, I think, right? You need to be talking to people from all different kinds of backgrounds to find out what they're thinking. Because, you know, I'm 60 years old and I commuted most of my career, and that's what I did, and I worked in a big office building, et cetera, et cetera. You know, my son's never done that. And so he has a very different perspective. Oh, and by the way, his friends have very different perspectives, even from him. So we could go on all day, but I see we're almost at the end of our time. Listening to, I do triple skip level meetings. Not just, you know, the people who report to me, I skip them and do here. I go way down here to figure out, so what's on your minds? How about the brand new people? We're only going to have a meeting with people who have been here less than a year. What do you think? So that they've got a forum to discuss how they feel with respect to being a brand new employee versus somebody who's been here either 5 years, let alone 20 years, if they came from our original parent company. So those are some thoughts, and I'm sure this discussion will continue in rooms like this for years.
Well, and this has been a great discussion, and we could easily continue this conversation for another couple hours, but I get bonus points from Commissioner Anderson if I end my panel on time, and I promise to do that. But please join me in thanking both Eric and Shannon for their participation, and thank you both.
Thank you for having us.
Well done. Thank you.